Cathie Wood revealed this $100 trillion industry is on the verge of being disrupted. Cathie Wood believes that she's found the next big thing in investing and has the data to back it up. Today we're going to talk all about what Cathie Wood revealed about the next $100 trillion industry. So watch the video till the end because today's video is going to be the bomb. Welcome to Investor Secret, your daily dose of wealth secrets. If you're interested in everything around big investors and their investment techniques, this is the place for you. Subscribe if you want to stay updated with all the investor secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. Cathie Wood believes that she's found the next big thing in investing and has the data to back it up. We were assuming that in the next 10 years, artificial intelligence would deliver, in the enterprise software space, a market cap opportunity of $30 trillion. The star stock picker said at a Milken Institute conference last month, "Our new number is $80 trillion. We think that is the big new frontier. Wood knows a thing or two about investing in the frontier of technology. Despite recent turbulence, her flagship fund ARK Innovation ETF has delivered a total return of 472% over the last 5 years, substantially outperforming the S&P 500 over the same period. So it's probably a good idea to follow Wood's lead and at least take a look at the AI space. Here are 3 attractive AI plays in today's market. One of them could be worth purchasing with some of your spare change. NVIDIA. NVIDIA's graphics processing units have long been a favorite among video game enthusiasts, but the company's capabilities extend far beyond the gaming market. For instance, its system-on-a-chip solutions are widely used in mobile computing and automotive markets. The Santa Clara-based chipmaker believes it can play a crucial role in driving enterprise adoption of AI as well. We are ready to democratize AI, and we're ready to make this thing usable by every enterprise customer, said NVIDIA's head of enterprise computing, Manuvir Das, earlier this year. Business in general is firing on all cylinders at NVIDIA. In Q2 of its fiscal 2022, revenue surged 68% year over year and 15% sequentially. Unsurprisingly, the stock has been a market darling. NVIDIA shares are up 124% in 2021 and are now priced at over $300. Alphabet. Google's parent company, Alphabet, is a massive tech conglomerate commanding a market of nearly $2 trillion, and it's not going to miss out on AI. In fact, AI is already deeply integrated into the company's product lineup. Whenever you search for something in Google, AI tries to find out exactly what you're searching for and deliver results based on what it knows about you. Alphabet also owns autonomous driving technology company Waymo. Last year, Waymo launched its fully automated robo-taxi service in Phoenix. Most recently, Alphabet announced the creation of a new subsidiary, Isomorphic Laboratories, which will use AI methods for drug delivery. It's built off the work done by Alphabet's AI subsidiary, DeepMind. After a nearly 70% climb year to date, Google now trades at over $2,900 per share. But you don't have to start big. These days you can build your own AI portfolio just by using digital nickels and dimes. C3.ai. With a market cap of $4.9 billion, C3.ai is small potatoes compared to NVIDIA and Alphabet. But if you believe in Wood's AI market projections, this stock shouldn't be ignored. The company is so focused on the technology that it not only has AI in its name, but it has also claimed AI as its stock symbol. C3.ai is an enterprise AI software provider, generating the bulk of its money from subscriptions sold to businesses from a wide range of industries. And subscriptions translate into recurring revenue, something that should make any investor smile. In Q1 of its fiscal 2022, the company's subscription revenue rose 29% year over year to $46.1 million. Total revenue came in at $52.4 million, also up 29%. At quarter end, C3.ai's total enterprise AI customer count stood at 98, representing an 85% increase year over year. The stock's performance, though, has been less than rosy. C3.ai shares are down more than 65% in 2021, giving contrarian tech traders something to think about. AI or art? There are a lot of players in the AI arena, and only time will tell which ones will be the ultimate winners. So always do your due diligence. Now, if you'd rather not get involved in the stock market at the moment, you might want to check out an overlooked asset that has very little correlation with the S&P 500, fine art. Contemporary artwork has already outperformed the S&P 500 by commanding 174% over the past 25 years, according to the Citi Global Art Market Chart. Investing in art by the likes of Banksy and Andy Warhol used to be an option only for the ultra-rich, like Wood. But with a new investing platform, you can invest in iconic artworks too, just like Jeff Bezos and Bill Gates do. Cathie Wood of ARK Invest is sticking by her disruptive innovation investment strategy and expects annualized returns of 40% over the next 5 years. In a blog post on Friday, she said the innovation stocks owned by ARK are not in a bubble, but rather are in deep value territory. The argument comes as ARK Invest's flagship ETF is down 24% year to date, with some top holdings down as much as 70% from record highs. After correcting for nearly 11 months, innovation stocks seem to have entered deep value territory, their valuations a fraction of peak levels, Wood said. Despite the steep declines, companies like Zoom, DocuSign, and Teladoc are still growing their revenues and improving profitability levels, she noted. Those improving business metrics can be chalked up to a rip and replace trend in the $1.5 trillion enterprise communication space sparked by the COVID-19 pandemic, representing the first major product replacement cycle since the emergence of the internet roughly 30 years ago, Wood said. While she thinks the stocks held by ARK Invest represent a bargain, traditional value investors disagree. The average price-to-earnings ratio of the ARK Disruptive Innovation ETF is negative, indicating that the average stock in the portfolio is not yet profitable. Meanwhile, the average price-to-sales ratio of the ETF is at 11.5 times, almost quadruple the S&P 500's current PS ratio of about 3 times. But Wood is unfazed and explained that a big wall of worry built on the back of high multiple stocks bodes well for equities in the innovation space. No wall of worry existed or tested the equity market in 1999. This time around, the wall of worry has scaled to enormous heights. As a result, she expects annualized returns of as much as 40% over the next 5 years for ARK's innovation strategy. If our research is correct, then our strategies will triple to quintuple in value over the next 5 years, Wood said. It wouldn't be the first time ARK Invest has delivered such strong returns. Over the past 5 years, ARK Invest's flagship ETF has delivered a compounded annual growth rate of 37%. Driving those returns are innovation sectors that Wood expects to scale to $200 trillion in value over the next decade. But that's a tall order given that the total market value of the global stock market is estimated to be just over $100 trillion. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Investor Secret. Bye!